Repayable, you know that the formulas are little bigger so that you will understand better and your examination problems will be like this. It is mentioned that 12% on what value? On face value. What is the face value? This will be your formula. Cost of equity is equal to dividend divided by net proceeds plus growth. Net proceeds, market price, as well as your interest part we are supposed to find out. Hello everyone, this is your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So we are in the 9th session of your topic called your financial management. Under financial management, we are discussing cost of capital. As I told you, we have completed your 5 mark and 10 mark questions. Now we are doing your complete 15 mark problems. Now, what is the agenda for the day? The agenda is very simple. We will understand concept. Along with concept, we will also work out the weighted average cost of capital also. Means it is a complete 15 mark problem so that you will understand better what is weighted average cost of capital. We also call this as WACC. We also call it as WACC. What is this? Weighted average cost of capital, and it is nothing but your overall cost of capital. O stands for overall cost of capital. Now, first one. So already we have done your problem number 1 in the previous session. Now we are doing your problem number 2. We'll go step by step. We will only solve this problem, and in this we have problem with redeemable. Redeemable in the sense repayable. Repayable, you know that the formulas are little bigger so that you will understand better and your examination problems will be like this. Now, the following is the capital structure of company. Determine weighted average cost of capital. Equity share capital. What is the equity share capital? You have equity share capital of 20 lakh. Second one. Debentures of rupees 12 lakh. Third one, your preference share capital of rupees 8 lakh. These are the capital or your capital structure. Now, along with that, we have external financing information also. Which are those? We have 3 things because we have equity, debenture, preferences. Whatever information we have, those are your equity, debenture as well as preference. Now, external financing information like equity shares selling price 120 per share. The expected growth rate is 7%. What is the selling price of the equity? It is nothing but your market price, maturity price, or else we can call it as net proceeds also. Now, what is your net proceeds? It will be 7% per annum. 120 per share, along with the growth rate is 7%. The expected dividend at the end of current financial year is 11. You have dividend also, you have growth rate also, and you have net proceeds also. I'll go for the calculation. We'll come back later for debenture as well as preference shares. Now, we are doing your equity shares. Which are the information we require? This will be your formula. Cost of equity is equal to dividend divided by net proceeds plus growth. Now, your dividend is equal to and your growth, then your net proceeds. We'll check one by one what are the informations are available. As per this, you have 120 will be your net proceeds. Net proceeds 120. So what is your growth rate? Growth rate, it is given 7%. Take growth rate as 7%. Then, so what is your dividend here? 11 rupee per share. So your dividend is 11 per share. Any doubt up to this? Whatever given in the information, we copied and pasted. Now, as per this, what happens? Your cost of equity is equal to dividend. What is your dividend? 11 rupee. Divided by your net proceeds 120. Then your growth is 7 This will be your calculation. 7%, keep it aside, we'll do it later. We'll calculate 11 by 120. It is how much? I'll use calculator for this. 11 divided by 120. 11 divided by 120. I'll get 0.09. I'll convert to the percentage. Multiplied with 100. You will get 9.1%. What is your answer? 9.1% plus 7%. Your overall answer is how much? 16.1%. This will be your answer. Remember, how come you got 9.1? 11 divided by 120 multiplied with 100. Why I did this 100? I need answer in percentage. If you want answer in percentage, you are supposed to multiply. Hope you're clear. Now, I am done with your equity shares. I'll go for the next one. Equity is over. Now we'll go for the next one. That will be your preference shares. Now, what about your preference shares? I need information of preference dividend. I need information of MP. I need information of NP. I need information of number of years. 2, it is common, it is an average. No, these are the information I am supposed to collect. Later, I can simplify this problem. Now, what is your dividend? I'll go back to your question. What is your dividend as per this? We are doing what? Preference shares. Now, 7 years, 12% preference shares. Now, how many years? 7 years. 12%. 7 years, I'll go back to answer. Your preference shares, number of years are 7. Hope you got number of years 7. Whatever information you get, collect and paste. Later, we'll go for one by one. Next. You need dividend, you need market price, or else your maturity price, and you need your net proceed also. Now, I'll go back to your question now in this. 12% preference shares of rupees 100 each. Very simple. 12% preference shares of rupees 100 each. I'll go back to your answer. Your dividend is 100 multiplied with 12%. It will be 12 rupee. What is your dividend? Simple. It is 12 rupee. It is mentioned that 12% on what value? On face value. What is the face value? 100. On 100, calculate 12%. You will get your answer. Now, this is done. What is the next one? Market price or maturity price. I'll come back to this. Now, 7 years, 12% preference shares of rupees 100 is sold at par. Will come later. Sold at par. Redeemable. Redeemable means maturity price. Repayable. Redeemable at 5% premium. They have mentioned that 5% premium. Remember. So, your what will be your maturity price? 100 plus 5%. It will be 105. Your maturity price is 105. Now, I'll come back to your net proceeds. How to find out net proceeds? I'll go back to that. 3% flotation cost on redemption. So, even at the time of redemption, there was a 3% flotation also. I need to minus that also. Redeemable at 5% premium and 3% flotation cost on redemption. That also I am supposed to minus. So, it is incomplete actually. So, it cannot be 105 on that. Minus 3%. Minus 3%. On 105 minus 3%, how much you will get? I'll calculate. 105 minus 3%. So, it will be 3.15. 3.15. You will get 10. I'll make it round off this one. 3. It will be 102. I'll make it round off. So, how much you got? 105 minus 3. It will be how much? 102. Now, what is your market price? It is 102. Now, I'll go for net proceeds. Your net proceeds is, your net proceed they have given sold at par. Par means what? Actual value. Then it will be easy for you. Actual value it is 100. I made this as round off because 15 paise we cannot calculate actually. So I'll make it as 102 and your net proceeds we call it as 100. Now we got all the information. We'll simplify now. In this, your cost of preference is equal to dividend how much? 12. Market price it is 102 minus your net proceeds 100. Number of years 7 whole divided by 102 plus 100 divided by 7. Now how to calculate? I'll simplify this first. So this will be 102 minus 100. So 2 divided by 7. You will get 0.2857 something. 0.2857 divided by 102 plus 100. 102 plus 100 divided by 7. 102. This will be average to 102 plus 100 divided by 2. This will be 101. Now, so what is your preference shares now? Your preference shares has to be plus, it is 12 rupee. So 12 rupee means this will be 12.02857. What will be your final answer? Final answer. So 12.028. So it will be 12.2857 divided by 101. So I multiply with 100 so that I want answer in percentage. 12.16. So what is your answer? 12.16% is your answer. Hope you understood. This is all about your calculation. Remember, I did this plus 12. I got 12.2857 divided by 101 I did. I got 12.16. Your cost of preference shares. Now, I'll go for the last one, debenture. Now, so debenture, I need even tax rate. I need interest also. I need MP. I need NP. And I need number of years. 1, 2, 3, 4, 5. I need 5 information for debenture. So you have a small paragraph. In this you will get all the information. Number of years, remember it is 15 years. What is the tax rate? In this problem, tax rate not given. So you can directly call it as tax rate 0. No need of this calculation. This is not required. Why? Because there is no tax. Interest. Interest will come later. Number of years. Number of years 10 years. Is it correct? 15 years. Number of years is 15 years. Number of years 15 years. Now, net proceeds, market price as well as your interest part we are supposed to find out. Now, 15 years, 14% debenture of rupees 1000. 1000 into 14%, face value, how much? 140 will be your interest. I'll go back to your answer. Your interest, 1000 into 14%, your answer is 140. 140 is your interest. What will be your MP and NP here? So we'll calculate face value, redeemable at 5% premium, sold at par 3% flotation cost. Sold means issue price minus 3%, redemption at 5%. Now, what is the value? 1000 rupees. So, simple calculation. Net proceeds 1000 minus 3% flotation. it will be 970. Market price 1000 plus 5% premium, it will be 1050. Hope you understood. Again, I'll go back to your question. They have mentioned that redeemable at 5% premium, you are supposed to add, and 3% flotation cost for sold, you have to minus. Hope you understood. Now, I'll got all the information. Now, I'll write it here. Cost of debenture is equal to, what is your interest? 140 plus market price. It is 1050 minus 970 whole divided by number of years. Number of years, it is a 15 years. Then 1050 plus 970 divided by, it is 2. What will be your answer? I'll go one by one calculation. 1050, 1050 minus 970 whole divided by 15. Whole divided by 15. You will get 5.3 something. 140 plus 5.33 divided by this calculation. So what will be the calculation? 1050 plus 970 divided by 2. This will be 1010. 1010. What will be your answer? Your answer will be 145.33 divided by 1010 into 100. You will get your cost of debenture. I'll go for this. Your answer is 145.33 divided by 1010 into 100. You got 14.38. You can make it as 39%. This is called cost of debenture. Now, you have understood how to find out your cost of equity, cost of preferences, cost of debenture. All three we found out. Now it is a time to find out your overall cost, RS weighted average cost. How to go for this? I'll do that. Now remember, what are your cost? 20 lakh, 12 lakh, 8 lakh. Remember, first one is equity, second one debenture, third one preferences. I'll go one by one. So in this, I'll take equity, preferences, debentures, total. I'll go like this. First one is equity, second one preferences, third one debenture, and the last one will be total. Why I have taken preferences? Because our calculation we did equity, preference and debentures. Now, what is the book value? I'll go back to your question. Your book value, equity 20 lakh, preference 8, debenture 12. 20 lakh, 8 lakh, 12 lakh. So it will be 20 lakh, 8 lakh and 12 lakh. Total it will come around 40 lakh. Hope you understood. These are the calculation. What is the weight? I'll come later. Specific cost after tax. In this problem, there is no tax, so it is a specific cost itself. What is the cost of equity? So it is around 16%, 12.16%. I'll go for 16% first. The first one, 16%. Then what is the cost of preferences? This will be 12.16. So this will be 12.16%. So 12.16% for your preferences. What is the next one? The next part will be called as your debentures. So how about your debentures? In debentures we have, so debenture calculation we have done, we got 14.39%. Your answer will be 14.39%. This will be your calculation. Now, so how much we got? 14.39% we got. So around, these are the calculation we have done. Now we are supposed to find out weight. How to find out weight now? 40 lakh is the total. Now, we have to calculate for 20 lakh. We have to calculate for 8 lakh. It is not 80, it is 8 lakh. And we are supposed to calculate for 12 lakh. Now, 20 lakh into 100 divided by your total. 20 lakh into 100 divided by your total. Similarly, second one, 8 lakh into 100 divided by your total. This will be 40 lakh. And the third one, 12 lakh. 12 lakh into 100 divided by your total, it is 40 lakh. These are the calculations we are supposed to do. I'll show you what will be the answer now. The first one, we are doing 20 lakh. First one, we are doing 20 lakh. Your 20 lakh into 100 divided by your total is how much? 40 lakh. We got around 50%. How much we got? 50.50. Remember, these are the things we don't take it as a percentage. We take it as a number. 16, 12.16 and 14.39. Now, I'll go for the next one. The next one will be 8 into 100 divided by 40. This will be how much? 20. 0.20. And the last one, if you calculate, you will get 0.30. Now, this is almost your 100 or 1.00. Now, calculate this. If you calculate, it will be 8%. If you calculate your 12.16 into 0.20, this will be 2.43. 2.43%. What is the last one? The last one is 14.39 into 0.30. This will be 4.317. Total of all this, like 8 plus 2, 10. 10 plus 4, 14. This will be 14.74%. What is your cost of capital? It is 14.74. This will be your answer. Hope you understood. So this is all about your calculation. So these are the calculation we are supposed to do. And in this overall cost of capital, we will get around 14.74%. I'll go back to all these slides so that you can take screenshot. So this will be your problem number 2. Your first part, cost of equity, cost of preferences, cost of your debenture, your weighted average cost of capital. So this is all about your today's session. Hope you understood what is weighted average cost of capital. Now, so please work out at home without seeing the answer so that you will understand better. Thank you.